Hi there. Welcome to Easy Options Trading with Rich. I'm Rich. I'm going to cover a topic today that's really been a angst to me. I'm really upset with what happens with stocks when I trade them. And a good example is what has happened to me with Alibaba stock. And I thought what I'd do is give you an alternative to owning the stock. Now, I own a lot, and the old theory was just hang on to it, sit on it. If it's a good company, it will come back. I still believe that, but after 2 years, it's getting a little old. So what I am doing is a far out put. And I'm going to explain to you why I am doing that and what it takes to make over 100% annualized in 260 days. So let's take a small portfolio, one that's not moving a heck of a lot, because I've been doing covered calls on them, and I've been doing those covered calls with a very high target price. I have changed my theory, and I'm doing the covered calls at a smaller target price, a smaller difference between what it is today and what my target price is, and I'm still not making a tremendous amount of money. I'm making about $1,500 a month on $1,300 shares. So not real happy with just $1 a share for the month. So now I'm going to tighten that up a little bit and take some of the extra cash that I'm earning and put that over into far out puts. So you can do this anywhere in the US and really anywhere in the world. You can do stock options and make a paycheck every week. Okay, the first thing you need is a US stock brokerage account. You need a US address and a US phone number. I will show you my results, whether they're winners, losers, or just a draw. I am transparent, and I'll share with you my decisions on each trade and how I decided to exit the trades. In this example of selling far out puts, I show you how to earn over 100% return on investment annualized with about 6-month and 9-month puts. So, as Jerry Maguire, Tom Cruise, show me the money. I'm going to show it to you. Now, don't get me wrong. I do a lot of covered calls, especially with Alibaba. And I make a very good return on investment with the calls on those Baba covered calls. But I make a lot more money doing cash secured puts. So as I say, about $1 per share per month. I make about $1,500 a month. So here's what I've got set up for April. I've got one at $75 target price, and it's currently at $72. I got two coming up next Friday. This one's already done, so I already collected the $23. I did a real short covered call. It was only about 7 days. And then I did two at $75, and that earned $149, and then another two at $76, and another two at $77. And then I switched dates to April 19th, did another two at $76, and then at April 26th I did three at $77. So when you add them all up, it's about $940. And when these April 5th and April 12th covered calls expire, I'll reload them, and I'll reload them for the 26th. When I get to April 19th, I'll reload that for like May 3rd or May 10th. And for the April 26th, I'll load those for the end of May. So that's what I've done with the covered calls. Now, I've got $57,000 invested in these covered calls. Now, my 400 shares are down about right at $6,000. It's $6,036. My 400 full shares are down $6,000. My 900 shares of Leaps, which are all out there about 2 years, they're down about $3,400. So as I said, this is what really gets my goat. I go ahead and buy these thinking they're at a great price. I ended up buying the 400 shares at an average cost of $86, and now it's $72. I went ahead and bought the Leaps as the product was going down, but I'm still down on average $460 per Leap. So it seems like I take 2 or 3 steps forward and then 4 steps back. It's just not what I like to have happen with these stock prices. And it happens a lot. And what they don't tell you about is when Alibaba was at $325 just 2 years ago, then we had a lot of angst in our government and a lot of turmoil between the U.S. and China, and it just fell and fell and fell. I sold out at $225, sold everything I had, and then when it got down to about $125, I bought back in there thinking, oh, it can't go any lower than that. Wrong, Rich. It can go a lot lower. It went as low as $65. It's currently at $72, and it's still the same company it was 2-3 years ago. It's got cash flow, money coming in. They can actually pay their whole company off with the cash they have on hand. Their debt is fantastic. So what do you do? What do you do when you pick a stock, you think it's a great stock, and it just keeps going down, and even when you dollar cost average is still, $86 a share? Well, I'm just getting darn tired of BABA not going anywhere. So over the last 2 years, BABA's not gone up. I think it was 74 2 years ago, and now it's 72. BABA goes up 3 or 4, and then it goes down 5. Making covered calls but losing money on the stock is the one con that a lot of people don't talk about. When that stock was $325 and it went down to $100, that's over a $200 loss. What they love to say during the next year is, oh, it was up 20%. The stock is up 20%. It's going places. Well, not when you started at $325. It went down to $100. You lost $225. 20% of $100 is $120. Still got a lot of ways to go before you get to $325. And even when you're trying to time and go in and out of the market, everybody knows you can't time the market. You don't know exactly what's going to happen. We don't have a crystal ball. So you got a 50-50 chance that during that first year, your stock is going to go down. And it may go up, but it's 50-50. So, here's Alibaba over the last 6 months. It's been fairly consistent. It was up there around 90. At the beginning of the year last year, it was 120. Now it's down in the 70 to 75 range. And if you look at my Keltner chart here, it's really kind of just staying right in there, with the average being $71.87. So here's the average. And I'm hoping that it will go back up again, probably around the elections. But you got to be careful with Leaps too. You can still lose money on Leaps. You may only own 80% of the delta, and you're still responsible for that loss, that extra 20% loss. So you can actually lose faster. Leaps are just another way to do margin, and you're responsible for that for the next 2 years. And after 2 years, if it ends up being $67, it's going to expire with no money. It's not going to expire worthless where you get to keep all the money. They call it worthless because all of the extrinsic value went out of it, and now you actually own all the premium. So let's take a look at what I've lost on paper over the last 2 years with the BABA stock. I lost $5,000 on 400 shares, and here's the numbers over here. So the shares, 400 shares, -5, and then total is a -8,900. So the only good thing about BABA not moving much is that I can do cash secured puts to help the covered calls cover the paper losses. I made about $1,500 a month doing covered calls and another $1,500 doing puts on just BABA. Now I got a lot of other stocks too, but I'm just using BABA as the example. So my annual return is about 42% on covered calls and over 100% on the cash secured puts. and I'm doing those puts on just BABA for the underlines. Now I have a lot of other puts out there, but for this example, it's just BABA. So what can we do to help this stagnant stock put some more money in my portfolio? I wanted to buy more BABA stock because it's down so much, and it's still a great company. I'd buy it if it was $225, like it was before. It was $325. I wasn't buying it at $325. That was a little high, but $225 I would. But I don't want to invest $7,000 for 100 shares, or $26.60 for 2-year leaps. So there is a way to help reduce the cost basis by taking some profit with at-the-money cash secured puts. And I'm going to show you how to do that. You don't own the stock. Remember, you were willing to buy the stock today. And I would be willing to pay $75 for that stock right now, today, and I'd be happy. Better than my $86 that I have on the 400 shares. So I call this strategy the far out put. So follow me on this. Follow the money. I risked $1,506 to make $1,500 in over 260 days. That is a 130% return on investment annualized. So when you look at, this one I did 3 contracts. That's why it's showing $1,500. But it's got a net credit of $5 per share, which is $1,500. Now, how do you set this up? Well, it's pretty simple. I found a good date where I had a good ratio, and my ratio was just a little over 1-to-1, as you can see. Make $48.70, invest $5,500, doing pretty good, pretty much 1-to-1. And take that annualized, it comes out to about 130%. So what you do is you sell a cash secured put at 75 on December 20th, which is 260 days away, and then you back it up with some insurance. If that stock happens to go below 65, I'm cutting my losses right there. I am going to have a premium that I get to keep, which happens to be $500, but the margin requirement is $1,000 minus your premium, which is $500 also. So if it goes below 65, I'll be paying $500 a piece on each one of these 3 puts. But what I'm going to do, because I wanted to own the stock anyway, is if it's down that low, I'll just go ahead and get assigned and watch it come back up later and do covered calls on it. It's what I've been doing for the last 8 years anyway, and the last 2.5 years I've done nothing but watch this thing sit between $70 and $75. So overall, I'm going to get a $1,500 credit, and it's going to reduce it by $1,506. Now that $4,800 example I just gave you, that was all of my far out puts for the year that I have left going on, and I'm going to show you those too. But for this particular trade that I'm doing for December 20th, which is 260 days out, I'm going to earn $1,500 in credit. I get that immediately, and my account goes into escrow, which they call margin requirement, $1,506. So put in $1,500, take out $1,506, and then be patient. So you're going to sell a put and buy some insurance and reduce the margin requirement by buying a $65 put. You will be required to escrow the margin requirement, which was $1,506. Margin is $100 for each dollar of price difference in the trade minus the premium. So we had a $75 sell, and we collected a premium on that, and then we had to pay some money back because we bought a $65. We bought a $65 contract to not only reduce the amount of margin requirement that was in there, but it allows us to not have to pay any more than 65. So if this thing finishes at 74, I'll buy it for 75. Pay the extra $100. If it goes all the way down to 65, I might not buy it at all. I may just take my loss and lick my wounds, put my tail between my legs, and go back home. But you get to credit the premium that you made So if you earn $500 in premium, you only need to put up $500 in margin requirement. Now that one just happened to work out 1-to-1. They never work out like that. The reason why is I picked a very volatile month. What's in December? That's right after the American elections. So I'm voting on the fact that after the elections and we change up the administration, that the stock's going to go up. I do not want to invest $7,000 for shares. Remember, or to $2,600 for 2-year leaps. This is a way to help reduce your cost basis by taking some profit with far out puts. If the stock is below the target price on December 20th, I'll still have $500 to offset the put for each contract. If it comes in above 75, then I keep the premium. I don't get assigned the stock, and I was going to buy it anyway today. At that point, we'll see what the price is, and I'll decide whether I take my $500 per contract, my $1,500 for the whole trade, and apply it towards buying some more Alibaba stock, which I want to do today. But I'm tired of owning the stock, so I'm going to do a cash secured put, which I really do well with cash secured puts. The key to that is don't get greedy, because you got to have a high win rate to stay ahead of the game. So here's some examples of the far out puts that I did for this year. Obviously there's the BABA. This one's for October, and it ended up with about 136% annual rate. This other BABA, the 1450 on a 1550, ended up being 130%. And then I did TQQ, 180%. I did Etsy with 124. And remember, I'm taking all these right at the money. So here on yen is currently $19. I put it in at $18. I do want to buy some yen, so I put a shorter date on it, and it returned pretty good money, 78% for the trade. If you took that times, the whole year, you get 143%. So I invested $5,500 on these far out puts to earn $48.70. Digest that for a second. You made $48.70, and your margin requirement was $55.30. To me, that's a no-brainer if you want to buy the stocks anyway. And if you end up getting assigned the stocks, you're getting assigned at less than what you would have paid for them today. So the money that's out there that you don't see is the money that you didn't lose. So I didn't lose on yen $100. I got it at 18 instead of 19. So that's kind of the way this works, and I'll track the strategy and see if I can sell early. If I get into September and some of these jump down to where they're 80% of the profit, then I'll just sell it and start all over again. So let's see which of these puts that I get assigned. We'll see. I have no idea. The plan is none of them, but I'll be happy if I make about 70% on this. My future puts are 4870 with an investment of 530. So yeah, I'm tired of stocks going down, and then I have to keep making covered calls, cash secured puts to stay ahead of the game, which I do, but it doesn't make me happy. I do much better with cash secured puts, but a covered call is safe. 100% of the time I'm going to make money on covered calls. Where I lose the money is the valuation of the stock. And the stock's supposed to go up 8 to 10% every year. Well, it hasn't been. And the market and the media, everybody tells you how great everything is. They forget where we came from. Where we came from is getting our 401ks and our private portfolios just getting the crap beat out of them. And now we have to try to make it up by doing cover calls, putting the ball back into our court and making some money. So stop losing money buying stocks. Try this. Try it. It's a far out put strategy. control the price that you buy or get assigned stock. Be patient and make money and reduce your risk of the stock going down. Now, I also recommend that you do cash secured puts every month and do cash secured puts, but here are my puts, my cash secured puts for this month. Sure, there's a risk, but if I get out early, I can get rid of the losers as quick as possible, and I ride out the winners. Just be patient. The profits will come. If you get greedy, it's the old saying that pigs get fed and hogs get slaughtered. Don't try to cut these cash secured puts so close. Work with a ratio of, if I lose one, I have to have three. If I lose one, I have to have three winners to get back to even. If you work with that ratio and you win 70% of the time, you're going to make a lot of money. But if you're using ratios of 1 to 10, that's kind of hard, winning 9 times because you have one loser. And can you get to 1 to 3? Sure. Now that's optimum, 1 to 3. Now that particular far out put I just showed you was practically 1 to 1, so that's even better. That's why I like that. Here are my puts for the month. Boeing, I did a call, and I thought the stock would probably go down, and it did. So it expires next Friday, and I'm going to end up 100% profitable. Baba, all my puts are going to end up profitable this next Friday. Baidu, next Friday, this Friday, 5 days, I'm going to collect all that. Chewy, I'm up on that also. I'm not down on any of these. You know, MasterCard, JD, Carnival Cruise Lines, Nvidia, Visa, Yen. I am up on all of them. So cross my fingers. I still got a long ways to go, but once I start making each one of these and the obligation is gone, then hopefully I can keep it above $4,000. So if I cross my fingers, I hope to net out $4,000 on this 5,200. Now, every month I don't usually end up, losing $1,000 off the top. I usually am right about 500. So my margin requirement was 17,249. So that's a very good return on investment on a cash secured put. It's 365% annualized. It's risky. You do have those ratios you got to worry about, and you can't get greedy because you don't want to lose. And when you see something going the wrong way and the news out there is bad for that company, something came up, get out of it. Take your loss, get out of it as quick as you can, and rely on all the others. So the trick is being a little bit diversified, but you got to do your research and know which companies you like to trade with, and all of them should be something that you're willing to actually buy, get assigned, and then do a covered call on it until it gets back up above the price that you paid for it, and then possibly sell and put money back into the cash secured put again. So if I clear 4,000, then the return on investment will be 25% for April and 30% annualized. So remember, I'm doing covered calls and made $940 so far. Once these clear, which will be 5 of them, actually 7, once these 7 out of the 13 clear, I'll reinvest those, and that'll pop in another $600. Then I got a couple more on the 19th that'll roll over into May, and then of course the April one will roll over into May. So I'll finish April over 1,500 with covered calls after I reinvest the 5th and the 12th, and I reinvest the 26th. So it won't be a problem. I see no issue with it at all. I do it every month, and it works like clockwork, but I have no control over what the stock price is. I'm still not happy about that, so that's why I'm doing far out puts. So thank you for following along with me on this example of the far out puts. Subscribe and like to my channel. Hi, this is Rich from Easy Options Trading with Rich. I'd just like to add a note here at the end of the video that I do financial coaching. I can cover a lot of different subjects, but I am very good at trading stock options, whether it be puts or calls, and all the different variations that come with that. So let me help you build your portfolio so that you can be on the road to financial freedom, and feel free to ask me any other questions about anything else in your life, which are, retirement planning, saving for college, all the things that hit us in life. So thank you for watching this video on Easy Options with Trading with Rich. Like and subscribe to the channel if you like what you saw. Thank you.